Hey, it's Mike. I'm not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we're going to talk about the July distribution numbers. So let's get started here. So overall, I have a strategy that I do on this channel. So pretty much what that strategy is I like to borrow money. And so in borrowing money, I have some foundational holdings. For the most part, I have $212,000 in my brokerage account. And what I do is I borrow money against that brokerage account, which is called margin. So borrow $60,000. And in doing so, it allows me to produce a side stream of income. So my $212,000 is made up of TSLY and SPY. And what I do is I invest in income funds that pay out over 25%. So the income funds that I have invested in, which is about $20,000 pop. So 20,000 this one, 23,000 this one, so I didn't update it on here, and then 20,000 on here. And so I have $60,000 totally borrowed, and all of these funds pay me over 25%. So pretty much in July, out of those three funds, I got paid $3,596.37 of the expenses to finance that $60,000 of debt that I borrowed against my $212,000. My expenses come out to about $334.58. Now, this is a projected expenses. For the most part, Robinhood told me that cost about $10.97 per day. I multiplied that by 31 days, and then I also added the $5 Robinhood Gold. Now, when I did this last month, my expenses were less, but I'm just accounting for a little bit more. And then if it was less, then that's a win in our books. And then obviously you have to pay the tax man. So in my calculations, I set aside 30% of the total income, which would be $1,078.74. I know a lot of these funds are taxed as return of capital, but once you hit your cost basis, then eventually at some point you will be taxed at or ordinary income or short-term capital gains, right? So I just want to be accounting for the amount of taxes. For the most part, probably the majority of this year, I'll be able to use this money and reinvest back into the funds, which is what I'm doing. And then when it comes to tax time, like 1, 2, or 3 months out, I'm going to start actually setting aside the money in the brokerage account. But yeah, moving on. So 25% reinvestment. So what I do is whenever I get any money later down the road, I was trying to devise a strategy of like what I'm going to do in terms of distributions and reinvestment. And just to kind of get that ball rolling, I set aside 25% for reinvestment. And of that 25%, I split it down the middle. 50% gets put into the S&P 500, and the other percentage of this, the other half, goes into the income funds. So the income funds I'm going to invest in is AMZY, TSLY, NVDY. So that is just the base amount, and then obviously we are left with a net. So after setting aside all the money for this, we are net with $1,283.95. With that money, I can do whatever I want. I could put that towards my mortgage. I can buy more income funds. I could buy S&P 500. I could do whatever I want. But I just like to already have all of this set aside. And what I'm going to do for this upcoming month is I'm also going to invest back 50% in the S&P 500 and the other half into the income funds. Okay, so presentation done here. So let's go to the actual account. So my total portfolio value here is $214,000. Obviously, the market's still open, so it's going to oscillate during this presentation. My Tesla share. So real quick, just want to say this. A lot of people think this is a terrible holding, but I used to be down $68,000. Now I'm only down $4,000. So in the last month, we've gone on a tear. We've gone up 42%. Last 3 months, 48%. So that's why my overall portfolio last month was $149,000, and now it is $213,000. And then again, with the reinvestment, I'm purchasing more SPY shares. So I've gotten up to $3,100 worth of value by just reinvesting this extra income that I get from these shares. And then I'm going to kind of go down the list, and then we'll look through the actual amount that was paid out to us. So AMZY, the total amount that I put into this fund was $20,000. So I know it says I'm down $370, but that is to me an inadequate marker of your actual performance. So, when you invest in these funds, when you invest in like the AMZY fund, what you're doing is like you're taking the growth of what Amazon would be, and you're switching it over to income. And so technically it does say it's down $370 from a price performance standpoint, but I only put in $20,000. So my actual account value is $20,416. So that means I'm actually up $416 in this position. When you do the reinvestment, ideally the the holding keeps going up. So your cost basis keeps going up, but my actual return is actually $416.83 because I only put in 20 grand, because when my money's already invested in it, the fund paying out to me is just a return. So instead of, the company reinvesting it, I'm just putting it back into it. So I'm actually up $416, not down, but it doesn't really reflect that. Going over to the NVDY. So NVDY, we have 705 shares, total market value $19,762. It says I'm down $1,024. In actual reality, I'm really down $340. Moving along to the final one is TSLY. So, I've been saying this for the longest time that TSLY is going to recover, and then this fund is going to recover and it's going to pay out some good amount of money. So that is exactly what's happening. It's starting to come back up. This used to be negative $13,000. The total amount I put in TSLY is actually, it's not $20,000, it's $23,000, because I remembered when I was starting this out about a year ago that I put $3,000 of my own money into this fund. So I checked the archives. So technically in TSLY, I have $23,000 invested. So if I have $23,000 invested, I'm actually only down $3,600, not the $10,220 that it applies over here. That being said, we're going to just look at the history, and I'm going to show you that these are going to be the payments coming out. So AMZN paid, I had 928 shares, paid me $76 a share, or excuse me, 76 cents a share. NVDY, $2.47 per share, and then TSLY was paying out $1 a share. So the last month was 70 cents, now it's $1. We are getting some positive movement, which is going to increase the amount, the dividend that is paid. Okay, let's talk about our other markers that we track on this channel. So our margin status, low risk. I have a $133,000 buffer before I get margin called. And then we actually, when we go to the investing standpoint here, my total margin used on my overall account is actually only $21.90. When last month, when my account value is like $149,000, it was a much higher percentage, but because my account value blew up, then you can see that the amount of margin use is a lot less compared to the overall portfolio. Carrying on, as you can see here, you can see the total returns. But again, remember, when discussing the actual returns, these are the incorrect numbers from the amount that we actually invested. And then one thing I would want to note for you guys, or at least what I noted, is, as you can see, this is the total amount of margin used, which is $59,576. But then my margin maintenance actually went up to $77,000. So I believe that this went up to $77,000 because my overall portfolio went down. So I'm sure that there's some algorithm that they use that if your portfolio is X amount of money, this is the margin maintenance amount. So, but yeah, so I believe it used to be about 61,000, 64,000. Now went up to $77,000. So something to keep in mind when you're investing and your portfolio value is going up. With that being said, that's all the metrics here on the Robinhood. Okay, we talked about our earlier numbers in the presentation. So this is me for just accounting for my own information, but you guys take a look here, all the expenses, taxes, whatever, and I just did it for each individual thing, so we don't have to spend too much time on it because we already discussed it earlier. But if you look at the monthly yield, yearly yield, and estimated yearly income, this is prior to expenses, taxes, and reinvestments. So of the $3,596 we got, if we annualize that, we would have been getting paid $43,152, and off of the $63,000 that we invested comes out to a yearly yield of 68%, or about 5.66%. So it's a pretty solid amount. Margin amount you can see here, $59,000. Margin maintenance about $77,000. The price paid. So the price paid here is all the reinvestment from the actual fund itself. So as time goes on, these income funds, they should be increasing value, because they're investing in a really good underlying. So then therefore it'll cost you a little bit more. So with the reinvestment, you're getting more and more shares. But if you are reinvesting with the reinvestment, it's essentially like buying Apple stock and getting the growth from the dividend and not from the actual appreciation of the stock. So, you're getting this really big income. And so your growth is coming from the income. Okay. So then obviously actual money used, total income, about $14,000 since I started in July 7th. So we're exactly at the 1 year mark. And so about made $14,000. And for someone like, if you're a newer viewer, you're like, why is it only $14,000 if you invested $60,000, you borrowed $63,000 to put into it? It's only the reason it's that is because the first couple months I only used about $5,000 or $10,000. And then in April or May, or excuse me, May, that's when I truly bumped it up to 60K. So, you know, it's not truly reflecting that price, but getting an extra $14,000 doing absolutely nothing is a pretty good deal. As you can see here are the expenses, and then we have the price performance off the price paid. So, you know, if we're basing our market value off of the price paid, then yeah, it seems like we're down a lot of money, but from in actual, the amount of money that we used, we're only down $3,400. So if the market value of all these funds is 59K, this is how much we paid. So we're only down a couple grand. But then also, you know, we have to account for the amount of money that is also in the S&P 500 that you're able to reinvest. So that would be $3,000. So we're pretty much break even here. And then you can see here for this year in taxes, about $3,400. So what the plan with this is, I don't have the money set aside in Robinhood yet. When I get closer to tax time, then I will set like January, February, March, I'll start setting it aside. But right now I just want the money reinvested so it can work hard for me. And then base reinvestment, so that's at 25%. Half of it goes in S&P 500, the other half into the income funds, which would be AMZY, TSLY, and NVDY. Then the net gain, same thing. So like I could have used this money to pay my mortgage, bills, things like that, but I'm just using that to go 50-50 SPY/income funds. All right, besides that, that is all to the video. If you guys have any questions, definitely ask them. I do try getting to them as soon as possible, but I just bought a house. I have a wife, so I work full time, so things get in the way. So if it takes me forever to answer a comment, don't mind it. I will get to it eventually. But if you have questions, definitely let me know. Besides that, I hope you all have a good one, and hopefully you learned something on how to build a side stream of income.